Which one is truly best for your money, a traditional brick-and-mortar bank like Patriot Bank or an online-only powerhouse? In today's rapidly evolving financial landscape, this isn't just a hypothetical question, it's a critical decision that impacts everything from your daily banking convenience to your long-term financial growth. We're talking about more than just where you keep your cash. We're talking about the fundamental way you interact with your money, the fees you pay, the interest you earn, and the level of personalized service you receive. For decades, traditional banks were the undisputed champions. You walked into a branch, saw a friendly face, and handled all your transactions in person. This provided a sense of security and a human connection that many still value. Think of Patriot Bank, with its physical locations in places like Memphis, Collierville, Covington, Millington, and Arlington, Tennessee. They offer the classic banking experience, personal checking accounts like basic checking, regular checking, now checking, senior checking, and student checking, along with business accounts, loans, and wealth management services. They're a staple in their communities, providing notary services, official checks, and safe deposit boxes, offering that tangible presence that some find indispensable. But then came the digital revolution, and with it, online-only banks. These institutions, often without a single physical branch, leverage technology to offer a different kind of banking experience. They promise lower fees, higher interest rates, and unparalleled convenience, accessible 24/7 from anywhere with an internet connection. Suddenly, the idea of waiting in line or rushing to a branch before closing time seemed, well, a little outdated. So, how do you decide between these two fundamentally different approaches to banking? It's not a simple case of one being universally better than the other. The ideal choice depends entirely on your individual financial habits, priorities, and comfort level with technology. Let's dive deep into the pros and cons of each, giving you the information you need to make an informed decision. We'll start with the traditional side of the coin, exemplified by a bank like Patriot Bank. The case for traditional banks, Patriot Bank and its kin. The most immediate and obvious advantage of a traditional bank is its physical presence. If you're someone who values face-to-face interaction, needs to deposit cash regularly, or prefers to speak to a human being about complex financial matters, a brick-and-mortar bank is likely to be your preferred choice. Imagine having a question about a loan, a dispute on your account, or needing to quickly resolve an issue. Walking into a branch and sitting down with a representative can provide a level of reassurance and clarity that a phone call or chat box simply can't replicate. Patriot Bank, for instance, explicitly lists general service fees for things like deposited item returns, debit card replacements, and even notary services, indicating that these in-person services are a core part of their offering. Beyond the personal touch, traditional banks often boast a wider range of services. While online banks are rapidly expanding their offerings, traditional institutions have historically provided a comprehensive suite of financial products under one roof. This can include mortgages, personal loans, investment advisory services, and more complex business banking solutions. If you prefer to consolidate your financial life with a single institution, a traditional bank might be a more convenient option. Patriot Bank, for example, offers various checking and savings accounts, loans, and even wealth management, aiming to be a one-stop shop for its customers. Another significant advantage is the established reputation and stability that many traditional banks possess. Institutions like Patriot Bank have often been around for decades, sometimes even centuries, building a track record of reliability and trust within their communities. This can provide a sense of security, knowing that your money is held by a well-established and regulated entity. They are often heavily regulated, with deposits typically FDIC insured up to the standard limits, offering a safety net for your funds. Furthermore, traditional banks often have more extensive ATM networks. While many online banks offer ATM fee reimbursements, having direct access to a vast network of ATMs from your own bank can be incredibly convenient, especially for frequent cash withdrawals or deposits. Patriot Bank, for instance, specifies daily ATM limits and POS transaction limits, highlighting their integration with physical cash handling. However, the traditional banking model isn't without its drawbacks. The downsides of traditional banks. Perhaps the most significant disadvantage of traditional banks is the cost. With higher overheads due to physical branches, staff, and maintenance, traditional banks often pass these costs onto their customers through various fees. These can include monthly maintenance fees, overdraft fees, ATM fees, outside their network, and even fees for services that online banks offer for free. Patriot Bank's fee schedule, for example, includes charges for insufficient funds, stop payments, and wire transfers, both domestic and international. While some accounts may waive monthly fees for higher balances or specific conditions, these can still add up. Another common complaint is the limited accessibility and convenience compared to online-only options. Traditional banks have set operating hours, meaning you can only conduct in-person transactions during those times. This can be challenging for individuals with busy schedules or those who work during standard banking hours. While most traditional banks now offer online and mobile banking platforms, the core experience often still revolves around their physical branches. Finally, traditional banks can sometimes be slower to adapt to new technologies and offer innovative digital features. While they are catching up, online-only banks are often built from the ground up with technology at their core, leading to more seamless user experiences, advanced budgeting tools, and quicker transaction processing times. The case for online-only banks. Now, let's shift our focus to the digital disruptors. The primary appeal of online-only banks is their unparalleled convenience and accessibility. You can manage your accounts, pay bills, transfer funds, and even deposit checks remotely, all from your smartphone or computer, 24/7, from anywhere in the world. This flexibility is a game changer for those who prefer to bank on their own terms, without the constraints of branch hours or physical locations. A major selling point for online banks is their typically lower fees and higher interest rates. Without the overhead of physical branches, online banks can operate more leanly and pass those savings onto their customers. This often translates to no monthly maintenance fees, fewer transaction fees, and significantly higher interest rates on savings accounts and even some checking accounts. This can make a real difference in how much your money grows over time. For instance, many online banks are praised for offering highly competitive APYs on high-yield savings accounts. With that said, thanks for watching, and until next time.